The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. TGIF. Happy Friday. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. 877-927-6648. You can check out Breakout Investing 5 days a week on TFNN from 3 to 4 Eastern. It's available as a podcast on iTunes if you can't listen live. And if you haven't had a chance to listen to TFNN on your smartphone, you should check that out sometime. Plug those earbuds in. Just open your smartphone browser, type in tfnn.mobi. Good way to listen to the show. And don't forget about Tiger TV. Go over a lot of charts each day on the show using Tiger TV. You can look at those charts live right along with me. Channel 1 at tfnn.com. The show is carried live, and it is archived on Channel 13. Tiger TV is also viewable on your handheld device. Just open your smartphone browser, type in tfnn.com, and then over on the right-hand side of the homepage, you'll see a box with 3 cell phones in it. Just click that box and give it a short while, and Tiger TV will start streaming on your cell phone as well. All right, the Dow's 10-session winning streak in jeopardy here. Very, very heavy volume in the market today. Options expire third Friday of the month, so not surprising to see very heavy volume in the market. Very, very heavy volume on the New York Stock Exchange. We're tracking about 20% higher on the NASDAQ. NYSE volume is looks like it could be double what we saw on Thursday, which would take us to about 1.2 billion shares on the New York Stock Exchange, well above average, and again 20% higher on the NASDAQ. Yesterday we had a little over 1.6 billion shares trade on the NASDAQ. Checking out the Dow, it is trading in a tight range today, but near its session low. Let me just get a refresh on this Dow chart here. We'll see the blue chip index down 45 points, 0.3%, 14,494. S&P 500, move on to the benchmark index. We'll see that it is down a little more than 4 points to 1559, and the NASDAQ composite hanging in there, trading in a fairly tight range as well. It is down almost 13 points to 3246. News from the SEC today that a unit of SAC Capital, that's the hedge fund that was founded by Stephen A. Cohen, agreed to pay more than $600 million in what the SEC is billing as the largest ever settlement for insider trading. The insider trading scheme involved a clinical trial for an Alzheimer's drug that at the time was jointly being developed by 2 pharmaceutical companies. So looks like that that saga is over. Home builders still looking good here. Mentioned them on the show yesterday. Nice technical breakout today. Shares of Meritage Homes, MTH. Good strong volume in Meritage today. Nice breakout over 45. It is up close to 3% on the day to 45.84. And we also had our eye on Ryland Group, because shares of Ryland Group, RYL. There's Ryland Group. Ryland Group had a nice breakout yesterday over around $40 a share, and good follow-through in the stock today, and good volume as well. Very heavy volume yesterday. Seeing follow-through in the stock today, up another 2.2% to 41.08. So it looks like these home builders still intent on leading the market here, and that's good to see. So MTH, RYL. Who else do we have in the group? Let's check out Pulte Group, PHM. Don't know. This is not quite a breakout Not quite a breakout yet. This is another double bottom pattern here that has the appearance of the letter W. So we're looking at resistance right in between, right around 20.5, 20.75. It is right around that swing point right now is Pulte Group. It is up 0.8% today to 20.72. So not quite a breakout yet for that home builder. Financials in the news today. Let's start by taking a look at Bank of America. At last check, it was trading nicely higher and actually have a nice breakout in BAC today. Stock up 4.4% to $12.65. The Federal Reserve did not object to the firm's payout plans to shareholders. Bank of America announced a $5 billion stock buyback program, as well as the redemption of about $5.5 billion in preferred stock. So, everybody calling for a market pullback, everybody talking about an overbought market. I can see that argument. I've been talking about the number of extended stocks out there. Bank of America is not extended here. This looks like a good breakout today. So you've got a lot of extended stocks, and then just a small handful of stocks that are breaking out of bases, like a Bank of America today. Also in the financial sector, J.P. Morgan Chase and Goldman were initially traded lower, and they still are lower. J.P. Morgan right now down 2.2% on the day to 49.90, and Goldman Sachs GS on the New York Stock Exchange, it was trading lower, hit an intraday low of 151.30, but it is up near its high now, trading at 154.67, up 0.4% on the day. J.P. Morgan Chase and Goldman Sachs initially traded lower after the Fed asked both banks to resubmit capital plans within 6 months for additional review. In related news, J.P. Morgan Chase executives are in front of a Senate subcommittee today getting grilled about the London whale trading fiasco that resulted in heavy credit derivatives losses. Also, DirecTV, DTV having a nice day today. Take a look at DirecTV. Huge move for the stock today, up 5.1% to 55.28. News here is that the largest U.S. satellite TV provider decided to end its pursuit of Vivendi's GVT. GVT is Vivendi's Brazilian phone and internet unit. The decision by DirecTV to abandon talks of acquiring GVT, that's fueling speculation that DirecTV and Dish could reignite merger talks. Take a look at Dish. We'll see that Dish is having a good day, outperforming, up 3.2% to 35.32. Economic data today, we had a few data points to go over. Consumer price index, a little hotter than normal. Overall prices up 0.7%. The estimate was for an increase of 0.5%. Core rate up 0.2%, mostly in line with expectations. Also had the first reading on consumer confidence for the month of March from the University of Michigan. Thomson Reuters, its consumer sentiment gauge dropped much more than expected. A preliminary reading of 71.8, the lowest since December 2011. The estimate was for a reading of 77.6, which would have been unchanged from February's final reading of 77.6. So big drop in consumer confidence. As well, we had a piece of manufacturing data. The Empire Manufacturing Index comes in at 9.2, much better than estimates for 6.5, and just a little bit lower from a reading of 10 in February. So good, solid reading on manufacturing activity in the New York region from the March Empire Manufacturing Index. U.S. dollar index, 82.28. Let's check in on chart for the U.S. dollar. It closed Thursday at 82.58. now at 82.28, down about 0.4% on the day. You can see a pretty bearish day for the dollar. Yesterday actually went over 83, but closed near its low, and it is extending losses today, down another 0.4%, 82.28 last on the U.S. dollar index. April gold added a $1.90, settles at $1,592.60 an ounce, up 1% for the week. And April crude oil finishes at $93.45 a barrel, up 42 cents, 1.6% gain for the week. In the energy patch, we did hear from Bonanza Creek. This is an E&P name that we've been keeping our eye on. Very extended here, but its price strength has just been a sight to behold. Would love to see this one form a good solid base and maybe get another opportunity to buy it, but don't want to chase it up here. Bonanza Creek is based in Denver, Colorado. They have operations in the Rocky Mountains, specifically in the Wattenberg field, and also in southern Arkansas in the Cotton Valley sands. Earnings up 150% from a year ago to 40 cents a share, 3 cents better than views. Sales up 110% to 73.6 million. That was 5 million better than the consensus estimate. So Bonanza Creek, excellent growth prospects. They should be making, full year profit this year, and next year expected to be very strong at Bonanza Creek. Let me just get those estimates for you, because it is rather eye-popping. In 2012, they did $1.35 a share. They just announced fourth quarter results. For the full year of 2012, they earned $1.35. That was up huge from 2011, where they earned 43 cents a share. Looking out this year, by the end of the fourth quarter, full year profit should be up 62% to $2.19 and 58% in 2014. So legitimate growth story going on at Bonanza Creek. Market cap of $1.6 billion, fairly liquid, average daily volume of 650,000 shares. So many stocks out there, need to consolidate, need to base. This is the tricky thing. If you feel like you're underinvested and you have money to put to work, I think you're better off just being patient here, rather than chase a stock like Bonanza Creek, or chase the airlines, or chase some of these biotechs. I mean, it's just, you really just, the key word is, you just don't want to chase here. Because the number of extended stocks out there far outnumbers those that are still within buying range. That's generally what we're seeing going on in this market. Apple having a good day, again, making a case it has hit a near-term bottom. Little gap up for Apple today. I wonder when the last time that happened for the stock, but it is up $7.82, up 1.8% to 440.32. We can look at a weekly chart for Apple. I've been talking about this weekly chart for a while, but it is uncanny how Apple retraced that entire gain from its breakout in January 2012, retraced all of that, and there it is, firming up and could be ready to start a new uptrend here. We'll have to wait and see how it plays out. Stick with me, folks. Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Before we headed into the last break, just talking about Apple making a case it has hit a near-term bottom here. I don't know if you caught the launch of the Samsung Galaxy S4 yesterday. Pretty nice looking phone with a screen size of 5 inches, 13 megapixel camera. The best that Apple can do right now with their camera is an 8 megapixel camera, so nice camera functionality in the Samsung Galaxy S4. The new phone is 7.9 millimeters thin, weighs 130 grams. Black and white models for now, with more colors later this year. So the release of the Samsung Galaxy S4 notwithstanding, Apple turning in another good performance here. Let's check in on shares of Netflix. We had Keir McDonough on the show yesterday from Brigos Capital. We're talking about the fact that everybody wants to short Netflix, and this is still a very strong performing stock, and in fact it really should be front and center on your watch list, because even if we do get a mild 3 to 5% pullback in the market, which I suspect is probably going to happen, I don't think the way the economy is looking this year, I don't think we're on the cusp of a major correction here. I think pullback of 3 to 5% is more likely. But if that happens, you could get another entry point soon in Netflix. Stock is down for 2 straight days, but fairly tame selling, down 1.9% today in pretty light volume to 184.85. We take a look at a weekly chart for Netflix, and you see this big, huge move for the stock back here in January, and really it pretty much gained 100%. And when a stock gains 100% like that and then starts to move sideways, forms what's known as a pennant or a flag formation, it can often precede higher prices. In fact, when you look back at Keir mentioned Taser, the stun gun maker, had a very similar chart pattern here. We looked at Keir sent me a monthly chart, and the move it made from a setup like this was just an extraordinary move. So definitely want to keep an eye on Netflix for a potential breakout here, front and center on our watch list right now. So Netflix still acting well. Let's take a look at shares of Google. I have a stored chart of Google with its 10-day, 20-day, 50-day moving average. We'll see that Google is under pressure here, 4 straight declines, sitting just above its 20-day moving average. It's down another $5.87 today to $815.67. It has been a tremendous run for Google since it gapped up here in January, broke out over 740. Finally looks like it's ready to consolidate here. This is a stock, even though it could try to find support at the 20-day moving average, you just want to see this consolidate for longer than 2 weeks. For a proper base to form, you generally want to see a 4 or 5 week consolidation at a minimum. Give the time, adequate time to shake out sellers, and so you've got a pullback going on in Google here. Still too early to buy in my estimation, but definitely looks like it's ready to base and consolidate gains here. Another thing that makes me a little skeptical of this market is the number of growth names out there that are really starting to show signs of duress. Equinix, for example, big earnings report back in February, gap up, and the stock just hasn't gone anywhere. In fact, it remains under quite a bit of selling pressure here, down 2% to 210.76, starting to live underneath its 50-day moving average, which for a growth stock is never a good sign. That can often precede even lower prices. So I'd be very careful with Equinix here. Buying demand seems to be drying up in this stock. And eBay, former holding in the model portfolio we got out of eBay several days ago. Ugly price action in this stock as well. Fell below its 50-day moving average a couple of weeks ago. Signs of institutional selling, really not attracting any buying demand at all. Shares of eBay down another 2.5% today to 50.49. It does look like a trip to its 200-day moving average at 48.50 is in play. Want to be very careful trying to catch falling knives here. Support looks like it's at 48.50, but you see these red volume bars here. This tells me that there are some big investors in the stock. So much better to let a stock like this, let the selling run its course and wait for a new base to form. A new base forms when a stock forms the left side, and then it starts climbing higher. You want to see signs of institutional buying on the way back up. Let the base form, let the stock try to break out from a base. That's really your low risk entry point. So eBay under a lot of pressure, still has more work to finish that base. A lot more work. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former chief technical analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. We've got about 25 minutes left to go in Friday's session. Hope you're all having a great Friday out there. Hope you have big weekend plans. How about shares of Intuitive Surgical? Boy, oh boy, down another 7% today to 455.51. Obviously, it's Da Vinci robotic surgical system has been in question. The latest news is that the president of the American College of Obstetricians and Gynecologists discouraged the use of the Da Vinci system in hysterectomies. And what you see here is a stock under, if you want to see what a stock under institutional selling pressure looks like, Intuitive Surgical is your poster child here. It takes out a low back in December of 476. Stock right now trading at 455. Again, you just want to be very careful about buying stocks that are being sold in spades by institutions. It is a bit ironic because shares of Intuitive Surgical gapped up, and on strong earnings when they reported earnings recently, and the reason it gapped up is that it was a pretty good earnings report. It was January 23rd when the stock gapped up in this area here, and revenue growth accelerated, and that was probably a bit unexpected. Top line growth up 23% in the fourth quarter from 20% growth in the third quarter. So the fourth quarter results showed that demand is still there for the Da Vinci systems, but the negative press over the past several weeks has just obliterated the stock. So it could be tough sailing ahead for Intuitive Surgical. Let's check in on the markets here, see where we're at with about 25 minutes left to go in Friday's session. Dow trying to come back. It is off its lows here, down about 41 points to 14,498. Actually, not coming back that much. I thought it was back a little further than that, but 14,498 for the Dow. Nasdaq Composite down 13 points to 3245, and the S&P 500 down 4 points to 1559. S&P 500 still has not taken out that October 2007 high. Volume very heavy in the market today due to options expiration, and so we could end up having another distribution day here in the market. Distribution day is just synonymous with a higher volume decline, and you want to pay attention where we're at, after this big rally for the market. When you start to see higher volume declines cluster, they start to increase in frequency, that is a time to get defensive. So if you've got increasing distribution in the market and you've got a big crop of extended stocks, you've got stocks going up in light volume, you've got the market going up in light volume, I just don't see any good reason right now to be aggressively putting money to work in this market. It's okay to look at what you have, continue to let it work, but just stay on the lookout for sell signals. If you start to see them, maybe trim positions in half, or take full profits. You don't want to let big profits evaporate if distribution continues to make its presence felt in the market. Other names under pressure here, these mortgage servicers at one point were looking pretty good. Ocwen Financial still holding above its 50-day moving average, but underperforming. Today looks like volume is going to come in higher than Thursday. Shares are down 2.9% to 39.48. So again, still holding that 50-day line, but getting very close to it. And then Walter Investment Management, WAC. We're going to hear from Walter Investment Management on Tuesday next week. That's when it reports earnings. Look at the selling that this stock is under. It is on pace for its sixth straight price decline. Volume has been picking up in recent days, so it looks like some big investors exiting this stock ahead of earnings. Walter Investment Management down 20 cents today to 42.08, off its session low of 41.08, but definitely under quite a bit of selling pressure here. At one point, the mortgage servicers were looking pretty good, like they'd be able to provide some leadership in this market, but not so much anymore. Even Nation Star Mortgage Holdings looks like it's ready to base and consolidate gains here. These stocks could have more left, but just like a lot of other stocks, they're in consolidations now. So you got to watch how the consolidations play out. If they start forming the right side of their bases and they start to retest former highs, and they start doing that as the market, starts to rally again, then you may get another opportunity to buy them. But you don't want to buy as a consolidation is happening. I don't think we looked at bond yields yet today. Let's check in on the 10-year note here, TNX. Last trading at an even 2%, yields lower 3 out of the past 4 trading sessions. So the yield on the 10-year note right at 2%, and the yield on the 30-year bond at 3.22%. But as you can see, these charts here are still looking pretty bullish. Doesn't look to me like yields are ready to roll over quite yet, holding gains nicely here. Earnings today. What a bit of carnage for Ulta Beauty. Ulta Beauty, a big market leader that has really was under a lot of pressure before the earnings report came out late last night. Remember that their CEO recently resigned, went on to become the CEO of Michael's Stores, and the stock reported earnings, and it was a very strong quarter of bottom line and top line growth, but the first quarter outlook disappointed. The earnings were up 37% from a year ago to $1 a share. That was 2 cents better than views. Sales up 30% year over year to $758.8 million. That was about almost $5 million better than the consensus estimate. But again, a disappointing first quarter guidance, and the stock is down 17.4% today to $72.97. So Ulta Beauty retailer with actual salons inside their stores. Sally Beauty, which caters to sort of a lower to middle market than Ulta Beauty, but Sally Beauty, selling pressure kind of muted here, only down at 25 cents to 28.98. So you tend to find the Sally Beauty holdings in not so much in malls, but in kind of strip malls and kind of more middle income neighborhoods. So you see Sally Beauty has been another nice performer in the market. Certainly looks a lot better than Ulta at this point. Krispy Kreme, KKD. Krispy Kreme hits a low today of $13.40. But has turned around. It is up near its session high, but still down 3.2% to $14.47. It gapped lower at the open. You can see what a monster performer Krispy Kreme has been. So it's still holding above its 50-day moving average. Earnings not too bad, up 83% from a year ago to 11 cents a share. That was a penny below. Sales up 16% to $118.2 million. Better than expected. Same-store sales growth impressive, up 7.5% in the quarter, but full-year guidance disappointed. They see 2013 profit in a range of 53 to 58 cents a share. The estimate was for 58 cents. And also Hibbett Sporting Goods, HIBB, obviously Dick's Sporting Goods, the well-known sporting goods company. Hibbett serves smaller, mid-size markets. Hibbett, after hitting an intraday high of 57.49, is now trading at 55.83, up 4.1% on the day. Numbers here looked pretty good as well. Earnings up 24% to 73 cents, 2 cents better than the consensus estimate. Sales up 14% to $217.4 million, slightly better than expected. Other names we're watching here, let's take a look at IMAX, high-tech theaters. Sure you've had a chance to see a movie in an IMAX theater, a lot of fun, 3D movies, but IMAX still looking very strong here, working on 3 straight gains, up 16 cents today to 26.34. Take a look at a weekly chart for IMAX, and it actually gets a little better here. Let's see, where's IMAX? There it is. Okay, there's a look at a weekly chart for IMAX, and this is just flat out a technically strong stock. So this is the thing. You had a breakout in early January. Again, this is when the market was serving up a lot of breakouts, and the breakout, worked, and now it's coming down to its 10-week moving average for the first time. And even better, the stock looks like it's ready to break out from this long base that started back in early 2012. So I really like the look of IMAX here. This is front and center on our watch list as well, and good fundamentals as well. They're expected to earn 98 cents a share this year. That would be up 29% from 2012, and then next year, $1.28 would be up 31% from 2012. So earnings story definitely going on here. New technology, new product. Like the look of IMAX from a fundamental and technical perspective. Let's check in on Solar Winds, SWI. We mentioned this name on the show yesterday. Still hanging in there. Pretty good technicals here as well. Down 63 cents today to 60.26. And when we check on a weekly chart for Solar Winds, we see a stock that could be on the verge of a breakout from a base that started back in the summer of 2012. So good technical setup here. What you want to keep in mind, like we mentioned yesterday, that this is probably a third or fourth stage base. When you're buying growth stocks, it's much better to get these things in the early stages of a run. You can see a series of base breakouts the stock has enjoyed already. So, kind of growth managers, understanding its growth story in late 2011. They're still embracing it in 2012. They still like it. This is a longer base. They still like it. But, the longer a stock keeps running, the more it gets known by Wall Street. So, later stage moves, later stage base breakouts can be more risky, but SolarWinds worth watching here. Looks like it's on pace for its fourth straight weekly price gain. Maybe you get a little downward low volume pullback here, and could pave the way for a breakout. Wanted to take a look at Neustar. We didn't get to this one yesterday. Neustar is an interesting company. This is the company that currently administers the United States number portability system. So if you have a cell phone and you want to change carriers, you can take that number with you. That is basically what this company does. Now, Neustar had been forming the right side of a base, but kind of bearish action in the stock today, down 3.2% to 45.09 after hitting an intraday high of 45.56. So you can see this price bar here, pretty ugly. Looks like there's some juice behind the selling today. But let's take a look at the weekly for Neustar. Do I have a weekly? Let's see here. Yeah, there's the weekly chart. I think I saved it. Yeah, so the price action today all of a sudden has made its weekly chart look a little suspect here, because what you have here is the potential of a weekly price decline. That would be its fourth weekly price decline in the past 5 weeks, and you have 2 distribution weeks that look like they could be taking shape here. So this is a stock that had been showing relative price strength, but because of this ugly reversal today on the daily chart, weekly chart went from looking okay to not so good. So that's a look at Neustar. And I got to tell you, there's when you look at growth stocks out there, starting to see some decent possible shorting opportunities sprout up here. So let's take a look at Regeneron Pharmaceuticals. Great fundamentals here. What is suspicious to me about Regeneron is that the stock did recently climb back above its 50-day moving average, but we've been talking about these lower highs that the stock has been putting in, and it climbed above the 50-day moving average a couple of weeks ago, and you can see it's having trouble holding on to this support level. It's only down 48 cents today to 171.45, but when you look at a weekly chart for Regeneron, again, this is another big, long-time mover, big market leader that's still holding above its 40-week moving average, but it looks to me like a test of that 153 level could be in play here. It is starting to show mild signs of distribution, so let's keep an eye on Regeneron. It looks like the prospect for lower prices is definitely there, and MasterCard underperforming today, down 1.5% to 519.05. It is underneath its 50-day moving average right now. The 50-day line for MasterCard is basically 521. MasterCard trading at 519.05 right now. And when you look at a weekly chart for MasterCard, this is a unequivocal, unadulterated late-stage base, and late-stage bases are fraught with risk. Let me find, here it is, the weekly chart for MasterCard. You can see a massive price move, multiple bases formed, giving up its 10-week moving average here. If this market starts to pull back and we start to see distribution become more pronounced, MasterCard looks very vulnerable here. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Checking in on the markets here. 5 minutes left to go in Friday's session. Dow Jones Industrial Average down about 34 points to 14,505. Here's a look at the Dow with some near-term support levels. The 10-day, 20-day, 50-day moving average. The Dow would only have to pull back about 4% from here to get down to its 50-day line at 13,915. After the scope of the market's gains since mid-November, this would be a normal pullback, and frankly, it would be a fairly mild pullback. So we'll see if how long it is before the Dow takes out that 10-day, 20-day. If it does that, then you'd expect to visit down to the 50-day moving average for the Dow. But again, only a correction of about 4.1%. You look at the NASDAQ composite here. NASDAQ composite still holding above its 10-day moving average as well. 32.48. 32.48 is the price right now on the NASDAQ. Its 50-day moving average is at 31.65. So you'd be looking at a pullback for the NASDAQ down to its 50-day moving average of only 2.5%. So, listen, the market's going to pull back at some point. Some people are saying it could be more than 5 to 10%. But what we know right now is that when a pullback starts, the handwriting is going to be on the wall, and the handwriting on the wall is going to be higher volume declines. Distribution days are going to start making their presence felt a lot more than what is happening now, because volume is tracking higher on both exchanges today. It's possible we could get another on the New York Stock Exchange and NASDAQ, but still, we're still looking at mild distribution in the market here. So S&P 500 right now down almost 3 points to 1560. Its 50-day line is down at 1507. So you'd be looking at a pullback for the S&P 500. Let's see here. Would be about 3.4%. So we're talking pretty mild pullbacks. And to think the S&P 500 from its current price of 1560, 1507 may seem like a long way down, but again, only about 3.4% off its recent high. So again, the number of extended stocks out there, tells me the market's probably ready to pull back here, but you just don't want to try to predict too much. What we know right now is that the market uptrend is still intact, and we just haven't been aggressive about putting new money to work. We did that a while ago, so we're willing to be content and let work what we have, but going out and finding new stuff to buy right now, very, very difficult because the market's been running for some time. Coming up next week, we've got more housing data. On Tuesday, we've got housing starts and building permits for February. We've got an FOMC rate decision on Wednesday. And then Thursday, we have more housing data, existing home sales for February, and also another key piece of manufacturing data, the Philly Fed, that will be out Thursday. Next week, in terms of earnings, we've got some interesting names set to report. Let's check in on Adobe Systems, Photoshop, bullish chart here, no question about it. You can see a nice breakout for the stock over $39 a share, 2-3 weeks ago, and it's been holding gains tightly here, looking very, very strong ahead of earnings. Next week on Wednesday, we've also got FedEx. Of course, the transports have just been rocking and rolling, and FedEx has been outperforming tremendously itself, still holding near highs, acting well. We've got Lennar next week, home builder. We've got Oracle on Wednesday, and a few more retailers on Thursday, Lululemon and Ross Stores. Coming up next, the Tom O'Brien Show from 4 to 6 Eastern. I'll see you back here on Monday with another edition of Breakout Investing. Have a wonderful weekend, everyone. We'll see you back here on Monday.